I became interested in Bitcoin when I became concerned about the compilation of debt that we're doing and racking up in the Congress. And currently, we're going to add another 1.9 trillion to the debt with this current COVID stimulus bill, when there's still $1 trillion from the last 5 COVID bills that have not been spent. So to me, this just looks like piling on debt for no good reason.
We're ready for an traded product, and so I would like to see an exchange traded product move forward. Of course, the facts and circumstances matter, but I think people are looking for ways through our regulated securities markets to access Bitcoin. And so if we don't give them the natural way, which I think would be an exchange traded product, they're going to look for other ways to do it.
The number one way to stop regulatory arbitrage is for the agencies to cooperate and to get on the same page and to basically lock arms as to what the vision is for going forward. And I think that's really, really important. We all have our individual mandates. That's not going to change, but we can coordinate on how we do that. The PWG report on stablecoins is a great example of how we can do that. We came together. We basically said, okay, how are we thinking about the risks? How are we thinking about the recommendations? Let's do that together. And what that does is it prevents us from basically setting up our own sets of rules and then getting arbitraged by players out there who want to pick and choose from different parts of those rules. This, I think, provides a healthier way to move forward.
They're having a new look at the cryptocurrency situation in China, more specifically mining, and also the legacy stuff, which is the trading, exchanges, the leverage trading, and so on and so forth. So the new aspect is they have announced their intention to really enforce it to a stricter degree.
So on that news, of course, we have Bitcoin dumping 4% and a whole lot of red across the broader market.
Where you see that the hash rate dropped quite significantly towards the end of June. That was with the first round of major crackdowns within China.
So I think OTC platforms that are operated from the big exchanges, the Huobi and so on, and Binance, they will close down. They will stop offering their services to the Chinese mainland users.
The government may have banned Bitcoin in Nigeria, but it didn't stop Bitcoin in Nigeria. All it shows us is that in other countries and other places, they have problems that Bitcoin actually solves. Because when you have a government that is standing against its people and its freedom and the freedom of the people to be able to transact in whatever they want to transact in, you see why Bitcoin even exists, right? And that government should not take away their freedom to right to speech, right? And because that's really what it is. Code is just speech. It's actually a way to communicate. So yeah, man, I think that's what's going to happen around the globe. You can't stop Bitcoin, so the governments are going to have to learn globally to adopt and adapt.
Today and probably for a few days, people may also think that Bitcoin is banned in Turkey and they may want to get their funds out in Turkish lira terms, or at least they want to make sure that their bank is still accepting those Turkish lira transfers. And when they see it today, tomorrow, or next few days, I believe they will also understand buying into Bitcoin and holding it or trading it or speculating it is still free, just like it was yesterday. And even today,
I think everything started in 2018, where just like Federal Bank, you have RBI in India, which sort of had a banking ban, which basically stopped all the banks from dealing with any entities that is dealing in cryptocurrency. So that was the first news, and that came into place. So basically, exchanges like WazirX and any other exchange cannot have a bank account to operate for the escrow of fiat. And just recently, in 2021, is when the government has started working on a newer bill. And what is happening is now and then, there is an overlap of the old bill that was sort of structured. So, sometimes media takes some information out and, throws it in front. And there's also a new bill that has been in progress, right? So we don't know everything about it. But definitely we know that the overall intent of the new bill is towards better regulation.
We're very enthusiastic as a government and President Bukele leadership. And we understand that he wants to move El Salvador to a different level. And that's why we implemented the Bitcoin law and the Bitcoin as a legal tender in El Salvador, And also the plans are, big. We're wanting to build the Bitcoin city in which you can invest, have a lot of advantages to live in, and it's going to be a city of the future. And I know the concerns here in Washington, D.C. is about losing power, losing the power of the dollar. And we can understand that, but El Salvador has to move on, and El Salvador is wanted to, as I said, to be in a different level.
Yeah, I mean, he's a friend, and we're sort of one-upping each other, understanding that there's a finite amount of capital in the world, there's a finite amount of talent in the world, and we even though we don't necessarily feel everything is mutually exclusive, obviously when things like was mentioned in the program, when China shuts down mining, Bitcoin mining, or Bitcoin generally, that's a huge strategic opportunity for the United States. And that's something that we as cities should all partake in. But I think there's also this friendly rivalry among cities to be sort of the first at, being, the Web 3.0 city. And certainly in Miami, as you know, prior to the mayor of New York becoming mayor, I was talking about, posting Satoshi's white paper on our website, allowing our employees to get paid in Bitcoin, allowing our residents to pay for fees and taxes in Bitcoin. And of course, I was the first elected official in America to pledge to take their salary in Bitcoin.
Well, we're not quite Miami yet, but I think it doesn't have to be large cities. And I think this trend and this transition is going to have to be led from the municipal, the local level on up to get that mass adoption and to see the opportunity and the benefits of utilizing Bitcoin.
And if you look nationwide at this point, really, we as a nation have to understand what digital assets are going to do to our economy. If you look at any of these factors like inflation and so on, there's just so many more ways to have to look at it, ways to measure that we really can't get a read on that now. So the faster we can get regulation in place, the faster we can get the federal government to understand what the benefit of these things are, the better off we're going to be as a nation.
It's not at all clear to me that the SEC has a role in regulating cryptocurrencies. Cryptocurrencies are not securities, and the SEC regulates securities. So that's not at all clear to me that follows. And I'll be watching very, very closely to see what the SEC does.
I mean, in some sense, the stable coins are a more exciting option than a central bank digital currency. They're competing stable coins now, and so I think that they can function in a very similar way to a government-run currency and don't have the same kinds of privacy concerns that a government CBDC might have.
Now, when you get to digital currency issued by a government, obviously that will ultimately probably supplant Tether. And for a lot of good reasons. One is just that it's going to be much easier for many banks and financial institutions and companies to hold something issued by, let's say, the Chinese government or the US government versus something that's held by a private company. And a private company that sometimes is its own worst enemy. I mean, how hard is it to get an audit done?
The new infrastructure deal, we thought it was going to just be about choo-choos and fixing roads. Turns out there's a whole thing about crypto in there.
They're hoping to raise $28 billion by, to help fund other aspects of the bill. And the expanded definitions seem to, be the main cause for concern amongst a lot of the folks in the industry.
We've been talking about it for a number of days. This is a subject that very few members of the Senate know about. It's just not on their radar.
Now that the infrastructure bill has been signed into law, the next step is there will be a rulemaking. And we are working with Treasury and IRS to try to keep that as narrowly tailored as possible and focus on centralized exchanges. So that's going to be a priority for us.
I think regulating the centralized exchanges who are already regulated, right, and making sure that they have clear guidance on what tax reporting they should be doing on behalf of their customers. Embracing something like a safe harbor that Commissioner Peirce at the SEC has proposed and is very thoughtful about. It replicates much of what you'd expect from a public company filing in the US, but acknowledging the unique properties of some of these assets. So those are just kind of three areas of low-hanging fruit that I think would go a long way.
I guess that's the major challenge ahead, regulatory challenges.
It really is. And, you know, it's a messy world. There's 195 countries out there, and, you know, each one is sort of separately exploring what their, regulatory framework for crypto is going to look like. And so we're sort of trying to stay abreast of all of them and, apply wherever seems appropriate.